similar to, I'll give it a simplified example, but some of the strategies could be buy and hold. I've got them. Buy and hold. A lot of people just buy and they say, you know what, this is my retirement planning. I'm going to buy it and I'm going to hold it for the next 10 years. And I know over a period of next 10 years, it's going to go up. Whether it goes up by 2%, 5%, 7%, 20%, but I'm in it for long haul. I'm not in it for a quick turn. Some people like to fix and flip. They like to buy old, worn out weatherboard homes. They want to quickly give it a fresh paint, spruce up the kitchen, clean up the bathroom, and they might sell it within that 6-month period. So that could be one of the opportunities. A lot of people do development on land where they will buy a block of land, subdivide it. Maybe they'll put a unit at the back, unit at the front, or knock down what's already there, put 2 there and sell them. Some people buy negatively geared properties for a purpose so they can have tax benefits that Roy talked about. Some people buy positive cash flow properties, so buying units or blocks of units that could deliver you higher rent, but the entry price is quite low. Some people look at land banking. What that basically means is you're buying acreages or blocks of land and you're waiting for things to happen in the economy or council to change zoning, and that could take a 10 to 15 to 20 year term, and that is a long-term play. Some people buy vacational rental investments. So, I want to buy a property in Dramana where I might go and live there during my summer holidays. Rest of the time it's vacant, or I might Airbnb it. Some people would look at short-term stays, Airbnb. Some will look at crowdfunding, real estate investment trusts, commercial property, international properties. So a lot of investors they love investing in properties internationally because international markets offer a diverse portfolio. Lease options. So what lease options are more relatable to a commercial property, where if you've gone and rented a warehouse, you may not have the capacity to buy that warehouse today for your business, but you're renting it with an agreement that I will buy it in 5 years at an agreed value. So you still continue to operate from there. So how do you choose what is right for you? There's a lot of different options, because something that's right for one person cannot be right for other person. It's dependent on individual circumstances. It's dependent on your cash flow, dependent on your deposit, your income, but more importantly, where you are in your property investment journey. And I use the word journey because I talked about a 10 to 15 year plan. Someone looking at buying their first investment property, they're not going to be looking at buying a vacational rental home. They're not going to be looking at land banking possibly. They're possibly not going to look at international investments. If they've never renovated, or they're not in trades, or they don't have a team of trades, they probably are not going to look at fixing and flipping. So understanding what will work for you and what will not can only be determined based on one thing, which is numbers. And Ryan talked about numbers in finance, Roy talked about numbers in tax. Same thing applies when it comes to property investment. It's all about numbers.